Welcome to the Candlesticks tutorial. The Japanese began using technical analysis to trade rice in the 17th century. Candlestick charts are simple to construct using the same information as a normal Western open, high, low, close bar chart instead of using a simple line. So we use candlestick charts, guys, to do our analysis on the market and to see when the buyers or sellers possibly are coming in to get a signal either to buy or to sell. So let's have a look at the actual two candles that are most important to us and how they work. So the red here, we've got sellers in control of this candle, and on the right hand side we've got buyers in control of this candle in green. So these are the two colors. You can actually change them up, but we use simple red for the sellers, and for the buyers we use green. So when any particular candle opens, whether it's a daily candle, a weekly candle, 5-minute candle, 1-minute candle, doesn't really matter, they all work the same way. So in this particular instance, on this red candle, the price opened at the 843.50 area. That's where the price opened. Now within this candle, the price had pushed up to the high here of 43.75, and the price had pushed all the way down to the low at 42.75 down here. And finally the candle closed out at the end of the 1 minute, in this particular case, at 843. So the actual, what we call the body, is where you see the red infill. So that's where it opened, and the body will stay filled to where it closed. Now this part here is called either the tail or the wick. So that indicates where the low of that particular candle went to in that 1 minute. And up the top there's still the tail or the wick, and this tells us where the high. So in this particular candle, when it started at the price of 43.50, the market pushed down and closed down at 843. That's where it closed. So it started up at 843.50, closed at 843, so it's lower, so it became red, it stayed red. Now if we look at the buy, which is bullish, bearish is for the sellers, bullish is for the buyers. So this particular candle opened at 842.75 here. Now within this candle, the market pushed all the way to the high at 43.25. It also went down to the low here at 42.50, and it closed out at 843. So we can see the 842.75, the candle was pushed up and closed at 843, so the body of this candle stays green, because in this particular 1 minute candle the price stayed higher. So we've got the wick or the tail here, the low. So most likely what would happen, the price opened, pushed down a little bit to 842.50, then it's pushed all the way up to 843.25 and pulled back just at the end of the candle, 843, and stayed green. This can happen several different ways. There's loads of different candles, the way they end up green, and they've got lots of different names, but for this we're going to stick with the basics. We're not going to get too concerned about different things, so when you first come into the room you don't get confused with all different looking candles. But keep it simple. When the sellers have got the market, we're in red. When the buyers have got the market, we're in green. Now if you move down here, the length of the body gives us an indication of the strength of the move within the 1 minute candle or daily session. So we use 1 minute candlestick charts during the day, guys. I don't use anything else. We do, however, look at the daily charts to give us an indication where the market could be possibly heading for the next session. And before the market opens, we go through that, where possibly the market could be going. But you'll see here, this is a bit of a snapshot of a few minutes trading, 10 minutes trading or so. And you'll see the candles when the sellers are in control coming down here, and then the buyers have taken control, pushing the price back up. Sellers, buyers, and on and on and on. The actual length of the candle gives you an indication of the strength. So you'll see here we had some good sellers in this particular candle. They're slowing down. This is what we call a doji. We're going to have a look in a second. Come down a bit, and then the buyers have hit back and pushed back up here. We'll have a look at that a little bit further in a sec. Another thing that we use, you'll see a lot in the room, is what we call a doji. A doji is when the opening price is the same as the closing price. So in any 1 minute, the price can go up and down, but it'll close at exactly the same price that it opened, and it'll give us different looking dojis. For instance, if the market went up higher, then cut back down, ended at the same price. So you see a lot of those on the charts to start with also. So even though there's many different charting techniques and packages available, and you can look at bar charts, line charts, so many different things, but we use candlestick charts. I find them very simple to use, and you just need to become good at using one particular set of signals or tools to use to your advantage. So the key to successful chart analysis is dedication, focus, and consistency. Dedication. You need to learn the basics of chart analysis, apply your knowledge on a regular basis, and continue your development. Focus. Limit the number of charts, indicators, methods you use. One thing I try to do, guys, is make it very simple. So we've got a few things that we use. We've got the PowerPoints, we've got the Williams, and we've got the stochastic. Basically, make it very simple. And we want to maintain our charts on a regular basis and study them often, daily if possible. So the more you use them initially, the more you'll get comfortable with them. So let's have a look at a chart here. And what I'll actually do is make these guys a little bit wider, if I can. No, this will do. So what we can see, if we just a simple look at this chart, we can see there were some good buyers in this candle, and the market's pushing up. We've got a few sellers in, got a doji there, and the buyers are slowly pushing again, and we've got another doji, a few dojis here. So basically the market pushes up, pulls back, pushes up, pulls back, and it goes on all day. And using candlestick charts we can actually find the patterns, and it gives us our support and resistance areas also. So that's the basics on candlestick charts, how they work, when the price opens, close, the wicks, all that sort of stuff. And I hope that gives you a quick insight to how they work, and we'll go over anything further in the trading room. Okay, thank you.